Hope everybody had a great 4th of July. Happy Tuesday. Let's dig right into our July monthly market report. So this is the first one of these that I've put together. I've avoided trying to dive into the numbers. Don't want it to get too dry. So let's get to the meat of this and get you out the other side with what you need to know. One thing is June's numbers are not in quite yet. I wait until the official ones roll through from our board of realtors. That might take a couple weeks, but I wanted to get this out now. So without further ado, let's talk about where we've been, where we are, and where we are going. So mortgage rates, if you've been tracking these for the last year plus, you've seen them dip to historic lows and they've normalized at around 3%. We'll get to later where we think they're going to go, but for now you can expect to be somewhere in the ballpark of 3% for a 30-year convention. Now, since COVID hit, our inventory's been on the floor, basically. So between 150 and 250 properties per sale at any given point in time, and currently we're sitting at 228. To put that in perspective, we're normally closer to 400 or 500 in a normal market, so we're still well below where we would be. That said, homes are still hitting the market, right? They are coming and hitting inventory, but they're selling extremely quickly. So we haven't seen much of a buildup in quite a while. So as all that's happening, it's causing the days on market to continue to shrink. And prices, as you know, through the freaking roof. I don't see a whole lot of slowdown in sight there. Again, I'll dive in a little bit deeper on that as we wrap this up. So let's head right in. We've got it broken down between single family, and then we hit the condos, townhouses, duplex situation. All these numbers we're going to talk about are what I call 12-month rolling averages. So instead of going strictly year over year or month over month, there's so much variation that can happen in this market looking at the numbers that way. So we're looking for trends, right? We want to see where things are going to end up. And in my opinion, this is the best way to go. So single family homes, as you can see, I mean, we're going back to January of 2020 and things bounced around a little bit. COVID hit, our inventory hit its peak at just over 10 months available. And we're sitting down now just above 5. So things are heading in and have been heading in a downward direction, though they have stabilized from a rolling 12-month standpoint, as you can see. So in the single family realm, things actually aren't so bad, but there's a reason for that. And that's because the single family median prices have skyrocketed. So if you're watching this, maybe you are in a condo, maybe you are thinking about moving up to a single family, maybe this is your first time poking around, but it's important for you to understand single families are hard to come by. Right? When there's an opportunity for a single family to get torn down and a duplex put up, developers usually find a way to make that happen. So single family demand doesn't really go away. It's just the supply continues to dwindle. So all that said, supply and demand causes the prices of things that used to be more affordable even just a couple of years ago to be less affordable now. So prices have continued to and will continue to increase in the coming months until demand in the market shows otherwise. Now, in terms of days on market, again, this is relatively flat, all things considered. We are starting to dip down as the beginning of 2020 gets knocked off that 12-month rolling average, but the single family homes that are sitting out there have been out there for, a good couple months for the most part. And again, that's because the more expensive homes tend to sit for a bit as people try to sniff out whether they're going to go, what they'll go for, causes a little bit of stagnation there. But again, no climbing. So things are still heading in a seller-friendly direction there. Condo Town. Again, this encompasses everything that's not a single family. So this is condo complexes, duplexes, and townhouse style homes. Now, these are much more stark differences than we've seen in the single family slides we just went through. So in terms of the inventory, it's again sitting on the floor. We're around 3 months and have been for quite some time. Given that these units are more affordable, that's where the bulk of the demand comes in. So the competition is very, very fierce. If you're not on top of it in the first few days, first week at most, odds are you'll probably miss out. So that said, the prices again are continuing to steadily increase. And remember, we've taken the variation out of this by looking at a 12-month average instead of month by month averages alone. So still heading in an upward direction. Units that you could have had for 500K or less are now starting to approach 700,000. I'm thinking of 3.2 on West Avenue somewhere. And that was unfathomable a couple of years ago. And nonetheless, here we are. So the last and most painful, I think, reflection of where we are in this market. And if you've been actively trying to find something, I'm sure you'll feel this one. Days on market is falling off a cliff. Now, take note of the metric I'm using on the left. It doesn't start at 0, right? We're not at total rock bottom, but these numbers are going to continue to drop steadily as we start to pick up the first few months of COVID. So over the next few months, I expect this to really drop down into the 30s because realistically, that's where we are, roughly 37 days on market. So numbers are not fun, right? That might have gone one ear out the other, might have gone right over your head. So most importantly, let's talk about what this all means, right? If you're thinking about buying, selling, whatever you're at, whatever stage you're at in this journey, let's talk about where things are likely to head. This is my personal opinion. Things could be better or worse than this, and we shall find out, but let's dive in. So mortgage rates. Now, multiple mortgage experts, of which I am not. Real estate is my specialty. That's why there are lenders who lend. So the big guys are all expecting things to stay roughly flat, around 3%, and by year end hit maybe closer to 3.5, 3.5%. So that will make a difference on your monthly payment, but realistically, that's not going to be what drives your price up. It's more likely going to be the prices continuing to increase. So as inventory continues to sit a little bit, right? We're in summer now. A lot of showings, if they have weekly rental tenants in there, we can only get in between 10 and 1 or 10 and 2 o'clock on Saturdays. So I expect that inventory will start to sit a little bit. They'll start to grow as you can only fit so many people, so many buyers in during that time frame. So I think the good ones will still sell extremely quickly, sight unseen, especially if that has to happen in this market, just to not have to sit around and wait till the rest of the competition gets around on Saturday. That's where we are likely to be going with inventory. So with prices, again, those charts speak for themselves. There's no sign of a slowdown. If all the buyers pulled together and said, hey, we're not going to take it anymore, we're going to put our foot down, maybe that would change things. But there's still so much demand out there that I don't see a slowdown in the near future. And really, I think that's only going to come with one of two things. If mortgage rates really go through the roof, which isn't expected until at a minimum 2022, likely 2023, when the Fed really starts to scale back on buying all the bonds with their easing and their easy money policy that they have going on. Or number two would be if corporations, the work world, really comes back heavy with the work from home arrangements. And again, I don't think that's likely. I think the workforce has been speaking loud and clear, and I anticipate most will go back to a hybrid model in the coming year or two. So we're a few years away, I think, before seeing any meaningful slowdown or decline, if that happens. So with all of that, the days on the market, I think it's going to sit a little bit because of those weekly tenants. But come the fall, I think there will be a lot of buyers who have been waiting to see what happens this summer, who will get ready to dive right back in. So I think that trend will reverse somewhat quickly. So hopefully that was helpful. I know these can tend to be pretty dry. There's only so much fun and humor I can put in to these. So if you have any questions, if you were expecting to see something and didn't, or if you would like to see a different chart or different metric in these going forward, let me know. Cell phone, all my contact info is here. Feel free to follow me on either of those social media platforms. I didn't throw this YouTube channel on here because if you're here, you already know. So make sure you hit subscribe and turn on notifications so you will be the first to know when these new videos come out each and every Tuesday. Appreciate you taking time to check this out, and I will see you on the next video.